In this video, we will walk through the solution to exercise 917, which focuses on derecognition of property, plant, and equipment. Here's the data for our problem. Landolphy Inc. owns a property that has a carrying value on December 31st of $520,000, which is comprised of its $950,000 original cost, less accumulated depreciation of $430,000. A requirement for this problem is, for each of the following independent situations, prepare the journal entry to record the transaction. Assume that at no time prior to the transaction did the asset qualify as a held-for-sale asset, and all transactions occur on December 31st, 2026. Under Situation A, the property was sold to Paz Inc. for $450,000. So we're going to debit cash for the $450,000 amount received. We're going to credit the accumulated depreciation of $430,000. We're going to debit the property for $950,000. And to make the journal entry balance, debits must equal credits, we need a $70,000 debit, which is a loss on the sale of the asset. Under Situation B, the local government expropriated the property to provide land for an expansion of the rapid rail transit line. Compensation of $750,000 was paid to Landolphy Inc. The journal entry for this is going to begin with the $750,000 debit to cash for the amount received from the government. We're going to debit accumulated depreciation for $430,000, credit the property for $950,000, and for the debits to equal credits, we need a $230,000 credit, which in this case would be a gain on disposal of the asset. Now on to Situation C. Due to a toxic mold problem, the property was deemed unsafe for use and was abandoned. Management does not believe there is any possibility of selling the property or recovering it for any amount. To record this transaction, we're going to debit the accumulated depreciation for its $430,000 amount, credit the property for $950,000, and for the entry to balance, we need a debit of $520,000, which the company would have to classify as a loss on abandonment of asset. And then finally, under Situation D, Landolphy donated the property to the local government for use as a future school site. At the time of the donation, the fair value of the property was $600,000. We could start with the easy parts for this entry by debiting the accumulated depreciation for $430,000, crediting the property account for $950,000, and then debit a donation expense account for the $600,000 fair value of the property. To make the journal entry balance, we'll need a credit of $80,000, which will be reported as a gain on donation of the asset. And that's it. We're done with this question.